Hi, everybody. My name is Bonnie Howard, and I'm a consulting CFO at TGG Accounting. Welcome to my new home office, which is also functioning as a gym, my kitchen, a movie theater, and a playpen for my cat. So all of the things. I'm so glad you guys are here today, and I'm excited to talk to you about cash flow forecasting. So cash flow forecasting is a tool that we use here at TGG Accounting with most of our clients. We believe that it's an essential part of living by the TGG way, which is running your business and making decisions based on the numbers. Before we dive into the mechanics of how this tool works, let's talk about why this matters to you as a business owner. Most of us are familiar with the phrase, cash is king. Now, maybe more so than ever. And for most of us, we already have some information regarding cash. We have a balance sheet in the accounting system. We have bank statements. So we have this ability to see cash at a point in time, typically historically, looking back. A cash flow forecast differs from this type of view of cash in that it's forward-looking. It assists in planning, risk assessment, and managing our business so that we can feel safe and confident. So why do we use 13 weeks as the time frame? You'll see in our template that we have it scheduled out for 13 weeks. 13 weeks allows us to look into the next quarter at a minimum, and it's also a common lending requirement amongst various banks. So for example, if you've downloaded and purchased one of our organizing tools for some of the recent emergency lending programs, you'll see that in one of the steps, we've recommended that you upload a 13-week cash flow forecasting. Why is the frequency weekly as opposed to monthly, quarterly, daily? Well, daily would be a little bit too short and difficult to manage. And we believe that using weekly, this allows you enough time to make timely decisions and adjust accordingly based on the existing cash on hand. And it's not too late to where you might miss something or develop some kind of unseen cash shortfall. So for example, do we have enough cash to make payroll this week? What adjustments might we need to make with some of our other accounts payable so that we can make sure our employees get paid? So this is a good opportunity to look at the existing accounts payable and see where we might have room to slow pay vendors or take advantage of discounts. With the cash flow forecasting tool, we can plug in what a 15% discount on a vendor would look like and see immediately how that impacts the cash that we have available to spend on other things or to save and make money on. In addition, this is going to be a good time when putting this together to evaluate all of your operating expenses and determine what is maybe no longer essential for the business. This tool is going to allow us, as I previously mentioned, the ability to plan out some what-if scenarios. Let's say, best case, the business continues to operate at full capacity. Worst case, what happens if one of our customers can no longer pay us or sales drop dramatically? Really what we want to plug in here is what's realistic, but we have the flexibility to be able to plan for some of this uncertainty that we're seeing right now. This leads to the next point. This tool is helpful with risk management. In addition to analyzing our payables, this is also a good time to look at some of our receivables. Do we have a customer concentration risk? Meaning, is most of our revenue and cash inflows tied up into one customer? Another example might be when we're looking at an accounts receivable aging, have we potentially overlooked some of the smaller, older AR balances that now when we look at in the aggregate make up a bigger number such that we might want to take that, send it to collections and see what we can still get from that. This might also be an opportunity to talk with your accounting and finance department and consider how should we modify our payment terms with our customers? Is there a way that we could change the form of payment that we get in such that we could turn the receivables into cash quicker? All of these are going to be good conversations to have as you start on building this cash flow forecast. Basically, we can use this tool to manage risk and then identify these potential shortfalls and opportunities in cash with enough time to make changes before they occur. The last and maybe the most important benefit of the cash flow forecasting tool is it allows you as a business owner to feel confident and safe. So there's a phrase that I like. It says, when you can name it, you can do business with it. And what this means is that we need accurate information so that we can develop an awareness to then identify potential problems and opportunities and then turn that around into some kind of action, Without knowing what's going on, we can't do anything about it, and we risk being surprised and not having enough time to course correct. So we've provided this template as a starting point for you, and there's going to be some inputs that you need as we go into it. The first input is going to be access to the accounting system and various reports from the accounting system. Examples of this would be an accounts receivable aging by customer and by invoice, an accounts payable aging similarly by vendor and invoice. We might also want to look at a detail of purchase orders and timing, as well as sales orders and timing, and potentially looking at employee time trackers. The second input that we're going to need is access to source documentation. Examples of this include customer contracts, vendor contracts, employee contracts, and bank statements. The last thing that we're going to need, and what I think is the most critical component as an input to the cash flow forecast, is going to be meetings and conversations with the department heads of the organization. This could include the sales department, the purchasing department, the finance department, and certainly the accounting department. All of these people, including yourself as a business owner, are going to have information about future events that haven't yet happened, and we can't identify by just looking back at the accounting system. So we need to be having these conversations to identify what's potentially going to happen so that we can plan these what-if scenarios and make sure that this cash flow forecast is complete. So having said all of that, there is no one-size-fits-all for this type of analysis. A huge benefit to our tool at TGG is that it's highly customizable, and you as a business owner can determine the level of detail and conservatism that you want to include. In the spirit of TGG's mission, we hope you find this tool impactful and use it to make your lives better as business owners. Thanks for watching.